Hey guys, what's going on? Welcome back to another episode of the Landlord Society podcast. I'm Charlie, you're here with HDK, and we're here to talk about all things property mastery in Australia, achieving financial freedom, building wealth, making the right decisions, and just getting a good entry to the market amongst this really tricky time right now. Handel, can you go through what are some of the major struggles that you're noticing with our clients at the moment in the market?
Right. Well, our clients actually don't have a problem entering in, but I think for most people who are actually trying to have a crack in this market without the knowledge and without the direction, it's a tough time to be in real estate. But I can tell you that in my experience in real estate, almost every time has been a tough time. Like even when interest rates were the cash rate was like zero during COVID times, there were still people finding it very difficult because those were the times where interest rates were low, but like the stock levels were absolutely dried up. So, and because of the uncertainty, people were still very fearful of entering into the market. So at the end of the day, there's no such thing as a more challenging or a less challenging time in the market. It is just always going to be challenging. But especially right now, I think the biggest challenge for a lot of investors come from rapidly growing prices and, of course, incredibly competitive buyer environment right now, as well as, think about it this way. I mean, there's a lot of movement in the market right now where, it's become easier than ever before to invest interstate. Because places like Adelaide, Adelaide is actually growing so fast at the moment. Perth is another one actually. Perth and Adelaide are like probably the number one destination when it comes to interstate investments right now, and that's why all the big money.
Yeah, literally buying sight unseen.
Exactly right. So the big money from Eastern Seaboard is basically getting shipped and dumped into these markets that are far more affordable than any other states, and it still remains to be, but. Right now, it's about to flip. Would you believe that Adelaide is about to flip on Melbourne on median house prices? Meaning that,
it's
currently...
unbelievable.
Yeah, in March 2024, obviously we're in August right now, but then it was Adelaide sitting at 902K, all right? And then Melbourne at 1.03 million. So only 100K and a bit more difference. I suspect now it would be a lot closer with Melbourne coming down a little bit and Adelaide increasing ever so strongly. And of course, Brisbane at 924. So I suspect Adelaide probably would have already flipped on Brisbane, although we haven't received that data just as yet, which I think is quite crazy. That comes to show people are going to struggle to know where to put their money, and people who don't have the knowledge are going to be caught in between places where they aren't able to have that execution technique or the execution power to be able to make a swift entry to a cut into a market that is growing so fast. You've got an update for Perth. Do you want to share a little bit more about that, Charlie?
Well, there is a prediction from the CEO of REWA that the Perth's market, the median house price for Perth is expected to reach $740,000 by the end of 2024. This is a pretty ambitious prediction in my opinion, but I don't think it's unrealistic. I think that there's still growth here. We're still seeing properties fly off the shelf. Like days on market is still very low relative to the last few years. And a lot of other data points too that would just show strong demand in Perth as it is. It's affordable. People are buying sight unseen from all over the country, and people are getting active with their investment strategy. So rather than just buying and holding, we've actually recently done a project in Perth. Very interesting. We were able to achieve a 125% value uplift over the span of 18 months. And sure, a lot of that was due to the recent boom in Perth, but that doesn't equate for the whole 125%.
Exactly.
So that's been a very good project. So we're very, very happy about that.
Well, let's actually talk more about that project, because that was one of those situations where, typically it's the type of person that's making, 50 to 70K a year in income. So not a stellar amount of income, not a stellar property to begin with, but they were able to find an opportunity. Now, you said 125%. And, we look at the Perth market and it's the market's probably done 20%, which is still absolutely stellar, but there's still other 100% that came from active strategy.
Exactly. Like that area went up about 30% in the last 12 to 15 months. Mm-hmm. But the major part of the growth came from the uplift.
Yeah,
okay?
Exactly.
So you can, with an uplift, there's many ways to do it. With commercial, you can, that comes from the leasing structure. Obviously, with residential, it's going to come from increasing the value of the property, making it a more desirable property to more buyers.
Sure.
So we did that by obviously renovating the front property.
Mm-hmm.
We put quite a bit of money into it. We did it. We went all the way. We did it properly. We didn't just do a cosmetic renovation. We turned this from a $450,000 heap. Okay, it needed a lot of work, needed a lot of love.
Mm-hmm.
It was competing with the nicest homes in the neighborhood.
Mm-hmm.
Okay, so that's one thing we did.
Let's actually debunk that a bit. I'm sure the listeners will be very keen to know what actually we advise and what actually had happened, so that we're able to achieve that crazy uplift.
So the major part of it was the granny flat at the back. Okay, so it was $100,000 to do that whole thing. Okay, which included the division, not a subdivision, just the division of the land. Okay, we've done this. This isn't the first time we've done this.
Wait. What do you mean
We've
a
done it
division
few
of the
times
land?
now.
Is it a division of the land?
So it wasn't-
How can it be not a subdivision, but it's still a division of the land? Do you want to clarify that for the listeners?
Yeah, sure. So it was part of getting the council approval to get a fence put through the backyard to then have a dwelling out the back. So you don't need to subdivide to do that. You just need to make sure there's enough. Yeah, you just need to make sure that with the council, whatever council that you're in, that it obeys by the rules and regulations of that area. So in our case, it worked. So we were able to do that. Now, a lot of people will skimp out and they'll do a shitty granny flat, or you see listings on realestate.com of a shed people are trying to rent out with a kitchen in it. It's like, no, that's what gives landlords a bad name. We hired a builder. We did it properly. That accounted for speed though. We were able to do it quite quickly. That pays. Okay, doing things fast pays because time is money, especially when you're talking about rental income that you're sacrificing. The opportunity cost of that, it's a big player. It's a big factor. We did the numbers. Obviously, used the feasibility dashboards. Did all that. Didn't skip a beat there. Made sure everything was meticulously planned out before we executed. And from then we rented it out, and we've just recently done the valuation, $975.
Wow,
so almost $1 million, which is ridiculous. Like, it's absolutely ridiculous.
Fantastic. Tell us a bit more. So with this particular client, what did we do by way of renting the premises out? Meaning, what kind of rents did we achieve for the front and the back portion of the property?
Whoa, hold up, Landlord Society. Are you sick and tired of the rat race and you want to start building wealth with property and generate passive income?
Then come and drop us a follow on Instagram and DM us the word landlord.
The word what, Charlie?
The word landlord, like the Landlord Society.
Okay, wait, Charles, what's our Instagram handle again?
At landlord.society.
You heard him, everybody. DM us the word landlord to our Instagram to learn more about property investing. Now back to the podcast.
Yeah, so initially $400 a week was for the front. Okay, so that was the initial rent. That was what the initial demand was for rent at the time.
And were you renting it out when you were doing the work in the back?
Yes.
Yes, great. Why wouldn't you?
So once the front house was renovated, that was the first one to get rented out. And then we proceeded with the works in the back. So we didn't have to sacrifice too much cash flow while renovating the property.
Great. What did the back lot rent out for?
$590.
So the back rear unit actually rented out for more than the front unit?
No, the front was $650.
Oh, the front actually that got
bedroom.
re-rented for $650 again.
Yes.
Yeah, okay. So that's a total income of, let's do some quick math, $1,190. $1,190 a week.
Yeah, for some that's a full-time income. Obviously, you got interest payments to pay and all that. Make sure you're geared, but we're in this case it's positively geared.
Well, in that case, the client was basically buying the first property, so at $400K. So what really owing on it couldn't be any more than $350K.
Exactly. Yeah.
And then you're servicing
so it's a big.
Yeah, with $1,100 and something worth of rents coming in. That's an amazing return.
Exactly.
That's heavily positively geared. I mean, the repayments the repayments on a $350,000 loan would be about $2,000, $2,200 a month, and and you guys are.
And obviously, there's the other expenses that come along with that. You know, there's
exactly.
other property
But the
expenses.
income is sitting at like 4.4k, so it's almost double the outlay into the what is it, the loan repayments that you guys are getting. That's an amazing return. That's an amazing result.
Yeah, it's unbelievable. So happy that everything went to plan. Everything went smoothly. There wasn't too many hiccups. A few headaches along the way, but we were able to just continue executing. And the beautiful thing about all this is this equity now is they can then use this equity. This is their next. This is the start to their trajectory. Their new future has literally been created from this one project.
Yeah, and what we're
and that's what I love to see. Like,
yeah, that's right.
I love to see that because it's not only are they benefiting, but the people who are renting the property are benefiting. Okay, because they're getting a good quality property, not a shitty thing that's got that they can't rely on. And it's so everyone wins. It's just
what I love about that strategy is that it's repeatable. It actually is repeatable. Even if the market is shifting somewhere else, and it's gotten more expensive and whatever, and people say, "Oh, you can't do that anymore." But the truth is, you can. You totally can. You absolutely can.
Exactly.
So there are suburbs
that's why I'm an advocate for doing it properly in the first place. Not doing it like if you optimize for quality on the construction.
Yeah,
you're going to come off a lot better, like long term, because it's going to have value. There's going to be like value uplift. You're going to have better quality tenants.
Yeah,
everybody wins in that situation.
Well, but I'm looking at the formula and the recipe of how that happened. Right, you first bought a property that's 440k, where just the front property on its own was going to be rented out at, I don't know, $400 a week, $440 a week or so, around about there.
It's about 4%.
5% yield. It's exactly 5% actually. And then you sort of go, all right, well, what is all of that? So you go, all right, cool. From there, that's nothing too crazy to a property purchaser in today's market. People look at that and almost won't even touch it. People are still very greedy, and they go, all right, well, I'm trying to go, look, I'm reading this article, and they said that people who are cash-strapped buyers are being forced to look further afield, creating exorbitant median hikes in low socioeconomic suburbs. And so that's sort of where we saw a lot of that growth in many areas. I'm not saying that's what the future is, but that's what happened in, a lot of people, bag all these areas, but that's where the growth actually happened, because people are cash strapped. They want to invest in property. They want to chase the growth. That's what they're doing.
They get greedy. Exactly. Yeah.
But that's what they're doing. But the thing is, they get greedy because they go to these suburbs and they expect these crazy high rental returns right off the bat. But the thing is, it doesn't happen. And it happens even less nowadays. Yes, you can find the odd deal if you're good at cutting deals, which we teach in the academy. But if you're good at cutting deals, then you can get properties under market value, where on your way in, you can ease your mortgage stress by having a cheaper property that rents out at a pretty decent value. But I don't think that's the goal. I mean, that's almost harder to achieve because that relies on a bit of luck and quite a lot of hard work. But just going and buying those neglected properties, the heap that you've considered, like the heap that you can buy.
This is a property that most people would have just turned a blind eye to.
Exactly.
They thought, no, I don't want to touch that with a 10-foot pole because it's too much work. Or it might have something seriously wrong with it. This can all be mitigated though.
Exactly.
It's going to be mitigated by a surveyor going to look at the property, just understanding, is the underlying asset good or not? Because if it is, then you might have an opportunity there.
Exactly right. And seriously, like those kind of properties that aren't that much and people don't know what they're looking. And that's the reason why these properties are less competed over. The problem these days, which we address at the beginning of this podcast episode, is a lot of people are cash strapped and they complain that their income's not high, interest rates are too high. Or, the problem is that you're just not informed. You just don't know the technique. Once you know the technique, then you won't be competing where everyone else is competing, right? And
exactly.
And that's the thing. You go to a listing,
following the crowd.
Exactly right. You go to a listing that everyone loves. It's pretty. It's nice. Well, ideally, that's the product you want to create. That's how you build wealth, and that's how you create money. The biggest issue...
You look for where most people aren't looking, and you create and you produce for the people that are looking. So you're producing for the masses in the already competitive market. So that's how you buy low and you end up with a high value thing.
Yeah, and I think the biggest friction that people face when it comes to buying properties is that they don't know what they're looking for. People go, I'm looking for an investment. No, you're not. You're looking for a forever home. Right?
Or they're looking for something to stroke their ego.
Yeah, but the thing is, you're too poor for it. So you can't afford it. So they're stuck in between places in an expectation that's not matching up with reality. No wonder they can't invest in property. I don't think we have an interest rate problem in Australia. I don't think we have an income problem or a savings problem in Australia. I think we have an expectation
Here we
versus
go.
reality problem in Australia. People,
Yeah, I think that's unpopular but true. Yeah.
well, yeah, what's the reality, right? I
Yeah.
think people
It's
have to
unpopular, but it's
understand
true.
that they will have to commit time to understanding and building a technique around property investment that actually caters for building wealth. Because I genuinely believe, and I don't need to believe anymore, I know and I see, is that people will actually get to their dream property faster by building their wealth in the back end, doing these methods. This bloke that we've
sure.
worked with, which is this granny flat strategy, let's sort of keep it in simple terms. Now that he's got income and equity, he can spill that over to probably $1 million property quite easily. No problems.
Yeah, yeah. Yeah.
So the thing is, people try to get that $1 million property out on the onset without any income, without the right income, without the right savings. Of course, it's never going to happen. But taking these small step approaches, but you know what? I think he's probably going to go to another $400,000 house and go, you know what? I'm going to do the same strategy. I'm going to make
because he's
another
excited. He's
500K.
chasing that same result. He's
Exactly
chasing
right.
the same result. He
And
just
if
wants
he's
to do it
doing
again.
this every year, like if he's consistently able to do this every year, he might be making 70K a year in his day job, but he's doing this, making 400, 500K off the back of his already existing income by way of equity.
And you know what's cool about this, and this is something that I mentioned in the book, is that now that he's done it once, he's now someone who is comfortable doing it again. So his perceived risk lowers massively. Because rather than this being a big unachievable thing that he's going in to do, he now looks at it as like he's confident, he's excited. It's a completely different, like complete 180 from where he was before, really scared, uncertain, thinking this is for other people, not me. This is for people that are seasoned and professionals, and like it's something that I can't do. It's like, yeah, you can. You just need to understand where to look and which risk to mitigate in order to do it confidently. And now he's done it, and now he can do it again. And that's what I love, that transformation.
That's great. And you know what I really love about this strategy is that even if the market moves none, like it was a zero movement in the market, the value uplift is still there. You know what I mean? Like there's still
Exactly. On paper,
on paper it's there. It'll give you the money. It is perceived by the bank, who are a lot more risk averse than the market at the moment, of course. In a competitive marketplace like Perth, and you know what, it can be rinse and repeated. Obviously they can't, he can't do it in the same suburb, but there's plenty of other suburbs in Australia. How many suburbs in Australia? Just got to find one that actually will work, and it'll just sort of ripple out into these with the same phenomena. Then it's going to work. It's just going to be rinse and repeated.
There's always an opportunity to be found. Always. It doesn't matter what is happening in the world or the economy or anything like that. There is always an opportunity. Yeah.
All right. Well, that's been a very information-packed, very exciting episode indeed. Thank you so much for tuning in, guys. And make sure you go and subscribe. Follow us on Instagram. Drop us a message. Drop us a like. And we will see you in the next episode. Peace.
Cheers, guys. See you later.